For Monday, June 29th, 2026, Indian equities retain their long-term bullish structure, but Friday's session opens with an immediate stress test. Early indications from the Gift Nifty signal a sharp gap down open of roughly 120 points. Compounding this morning pressure is a severe afternoon threat, heightened volatility in the banking sector driven by today's Sensex monthly options expiry. Navigating this session requires strict capital preservation rather than aggressive directional betting. The broader macro environment remains supportive. Market fear is actively declining, with the India VIX dropping to a multi-week low of 13.05. Crude oil has stabilized between $72 and $73 per barrel as geopolitical tensions in the Middle East transition into domestic US political debates. However, institutional positioning reveals a sharp divergence. Massive cash buying from domestic institutional investors is colliding with heavy foreign defensive hedging, where FA is currently hold 5.45 lakh long puts against a mere 52,000 short calls. This data indicates that while domestic money will act as a long-term structural floor, foreign hedging will force a highly defensive posture at the opening bell. On this Nifty 50 intraday chart, Friday closed at 24,056, tracking toward the 24,400 macro target. But with the expected gap down, a sustained break below 24,000 targets, 23,950 and ultimate support near 23,850. Reclaiming 24,100, however, could trigger short covering toward 24,200. The massive put writer base, heavily concentrated at the 24,000 strike, makes it the definitive battleground that will dictate the Nifty's trend today. In the banking sector, Bank Nifty ended last week with a mild positive close at 58,177. There is no direct weekly expiry for this specific index today. However, today is the Sensex monthly options expiry, with a max pain zone tightly concentrated between 77,000 and 77,200. Because HDFC Bank and ICICI Bank are massive constituents of both indices, Sensex options pressure will force mechanical volatility into Bank Nifty, specifically between 2 pm and 3:30 pm. The technical boundaries for Bank Nifty place 57,900 as the absolute pivot, with upside resistance at 58,500 and downside support at 57,600. Traders must recognize that afternoon Bank Nifty moves are often dominated by mechanical Sensex options settling, which can temporarily overshadow standard banking fundamentals. Avoid buying the opening gap down blindly. Wait 15 to 30 minutes to let the market establish a clear opening range before committing capital. Define strict entry parameters. Only execute long positions on deep dips near 23,850 or upon a strong cross above 24,142. Conversely, only initiate shorts if the 24,000 level breaks on heavy volume. To survive the afternoon, reduce or completely close Bank Nifty positions before 2 pm to avoid the inevitable Sensex expiry whipsaws. Reacting to confirmed price action and honoring strict stop losses rather than attempting to predict the bottom will be critical to surviving today's volatility.